Welcome to another riveting edition of Risk and Return. I'm Charlie Gasparino from Fox News, Fox Business, columnist for the New York Post. I'm here with my partner in crime, Bob Sloan, the granddaddy of data from S3 Partners, breaking down his latest numbers, crunching, market moving plays. They actually don't move the markets. They're before the markets move, which is great about Bob's data. They foreshadow what's going to happen next, which is why this is must-see TV. I'm just here for the ride, so don't pay attention to me. No, I'm only kidding. I do have some interesting breaking news. We have lots of news going on today, and it's hard to do you want to get to my news first, Bob, before we get into your actual calls? How do you want to do this?
Let's do it. Yeah, let's go.
Yeah, let's hit the top with some news. Fed chairman is going to be chosen. Donald Trump, the president, is interviewing people. He's interviewing Kevin Warsh. It comes amid an interesting background. Backdrop. Now, we know Kevin Warsh is a longtime academic, former Fed governor, been around the monetary policy scene for a long time. Smart guy. He's an academic now. The odds-on favorite, though, is Kevin Hassett, the NEC chief. Still. But there's a lot of pushback from Wall Street. I mean, we reported about it last week. I reported on it specifically that Wall Street is saying to the president, listen, you need credibility in that job. Kevin Hassett's a smart dude. I mean, this guy has got a PhD in econ from University of Pennsylvania. He's been around a long time, but he's seen as kind of a supporter of the president. And you need a little bit to sell monetary policy to bond traders who are notoriously skeptical of Fed chairs who want to monetize that want to give essentially lean towards the growth portion of the dual mandate as opposed to the inflation portion. There could be issues. I mean, remember, there was a Liz Truss moment that people keep talking about. Liz Truss was the former British
Prime Minister,
right? Prime Minister who got basically blown out of office. The bond market rebelled against them, started selling. So he interviewed Warsh today. Trump is his own man, Bob. I mean, the fact that he's keeping this going means he's listening to people, obviously. I spoke with some people yesterday. They still think Hassett's the odds-on favorite because he wants certain things that he can get guaranteed out of the Fed. And Hassett seems to be that person, more than Warsh, even though they're all Trumpers. Kevin Warsh.
Well, he said today, the president said today, that they should have doubled the interest rate cut today from 25 to 50 bips.
Yeah, well,
he had a lot of
dissent. Obviously out. Yes, right.
Right. So, but the long end rallied, right? So the long end actually improved, and that's what the whole thing's about, right? The whole thing, and you said it on this show. We've said it on this show. It's about the 10-year. That is the world's benchmark. It's the most important benchmark in the world, and they like the decision. So,
Bob, I wonder if the long end rallied because it's not a done deal with Kevin Hassett.
Maybe.
It comes as he's interviewing Kevin Warsh, and Warsh is seen as more independent. So I wonder if there's some interplay here. Anyway, it's all speculation. The bond market.
Well, short interest in the ETFs, the long end ETFs, which are TLT and IEF, have gone up tremendously. It's like 76% in the year. And it's actually, there's of the 40 some odd biggest ETFs, it's the 43rd biggest ETF, TLT. And that's the equity ETF to short the long end of the curve. And it's amazing because it's the fourth most shorted ETF in spite of being the 43rd biggest ETF. So coming into this number today and coming into the Fed decision today, equity investors were leaning really heavily on the fact that maybe the 10-year would blow out. So it's interesting. You get this schizophrenic thing, right? Bond market rallies.
I mean, did we get some
rally, and the ETFs were short interest at all-time high.
Well, remember, Powell came out today and said no more interest rate cuts.
I know, but going into the number, if we could pull up and we see the chart right here, you can see. Look at how much that the short interest has risen over the last, 6 months.
Interesting.
So there is a lot of concern around the 10-year. Maybe this decision allayed some of that concern. And also, I think, to your point, a lot of people are saying, hey, maybe it's not a done deal with Hassett. Maybe maybe Kevin Warsh, which is the Wall Street pick. I think everybody that
they would
certainly
love him.
they would love him, right? He's definitely he is the
he worked at Morgan Stanley. He's kind of considered independent.
Right, and markets would really like that. Maybe that's what they're saying.
But I still think he's going to pick Hassett. So that's neither here nor there, as they say. It's he's his own man, Bob. And
well, it's interesting, right? Because the Fed, even though they may only do another 25 basis points next year, they did purchase $40 billion worth of treasuries or I think maybe it was agency bonds recently. So, when the Fed purchases bonds, they're putting money back into the marketplace. So it's a split dynamic, right? Equity investors were bearish, and people want to be bearish right now. We have a pretty interesting chart if you look at it, and if we could pull it up, about how many searches have happened in the last 3 months. Look at this chart. We have short interest and Google search trends for AI stock bubble. Look what the black line there is the amount of searches. It's in the hundreds of millions. So starting more or less in October, the search for the term AI stock bubble has exploded. But the orange line, short interest in the Mag 7, is down, flat, up, down a little bit, and the total. So there's just an overall nervousness about how much financing is available for the capital requirements of AI.
Yeah, I've heard that. Larry McDonald over at the Bear Traps Report told me that. I mean, he looks at it differently from the energy perspective, that he doesn't think there's enough energy infrastructure for it.
And that's why we were talking about nuclear reactors. There's a dispersion chart of how many nuclear reactors have been being built in China right now versus the last one, I think, that was built in the U.S. Don't quote me on this. I can't remember. It was something like 1981 or 2 or something like that.
Right.
Our infrastructure is very old, and they have 30, I think, that they've built, and they're also building different types of nuclear. Now, some of that technology is not necessarily new, but the fact is they're doing it, and that's what I think people are. But you have to have two things, right? You got to have the money, and you have to have literally the transmissionable power to make this thing work. At least that is the general consensus, and that's what is the overall view of the marketplace. And the fact of the matter is that the Fed cutting another 25 bips, the long end rallying. CDS, by the way, Oracle just reported at 4:00 today, and they hit estimates, but the revenue on software was down a little bit. So the stock's off 5% after the close, and the CDS went from 125, as we were talking about last week, to 110, and now it's bounced up to 120. But the fact of the matter is that debt financing is going to probably be cheaper, probably. So the free money that's needed to finance all this capital capex for AI is going to continue for the foreseeable future. So I think the nervousness that we're feeling, and we talked about this, the media just goes crazy with the word bubble, and they're reacting to what's searching, and the search becomes the news, right? And that's one of the things I love about this show is, Charlie, I don't know if you've noticed this, but we talk about a stock, and then 4 or 5 days later, it's a headline.
I do notice that.
You notice that?
Well, I mean, your stuff is on the news. I mean, your picks are on the news.
Well, we don't get credit for that. We should start watermarking and all this stuff. So you can't.
Yes.
No, but seriously,
I mean, we get credit.
It's on the news.
We get credit for because we're building viewers, and they see value in what we provide. I think this is a transition into your stuff, and then we're going to come back to my headlines, which is maybe a buy signal for Warner Bros. Discovery, because I think there's going to be a bidding war for that. But let's get to some of your calls and some of the stuff that you got working, and then we'll circle back to my Warner Brothers stuff.
Sure. So we got two quick calls for the week. Our bullish call this week is Costco. Everybody knows what Costco is. And they report Thursday afternoon. We're bullish on that. That there's some good dynamic there, whether or not they increase their membership costs or not. And that's what the shorts are betting, that's an inflationary trend. But we actually think there's a bullish signal there. And then Ciena, which is a networking, is a Cisco competitor. They report Thursday morning. We're actually bearish on that. Year-to-date change in short interest is 50%, and we think that has an influence on what's going to happen as they report their earnings on Thursday morning. So those are our two picks. Let's go back to you, and let's talk about what's going on with the news story of the hour.
Well, I mean, this keeps changing, Bob. Warner Bros. Discovery is in the middle of, I mean, the bidding war goes on. Okay, as you know, Warner Bros. Discovery picked Netflix as the winner of its bidding war it was essentially between Netflix and Paramount Skydance, run by the Ellisons, David Ellison, the independent movie producer, and his father, Larry Ellison, who's the Oracle co-founder. And there's other people involved. Redbird is run by a guy named Jerry Cardinal, brilliant media banker. I mean, it's a formidable team. Jeff Shell is the CEO. Put all that together, they thought they had the winning bid. It was an all-cash deal. There's a lot of bells and whistles with Netflix's deal. Bottom line is, it's not over yet. There's going to be, as I signaled would happen, Paramount Skydance did indeed on Monday announce a hostile, which they're going to go to the shareholders with their bid. By the way, they're not going to go. I mean, if they do, it would be futile. But you don't go with the same bid that you up your bid. So this bidding war is going to go on. I mean, it's likely that you could see Paramount Skydance come in with a bid that pays for the breakup fee. There's on the Warner Brothers side, if they walk away, there's a $2.8 billion breakup fee. That's $1 a share. So if they bid 32, they'd be throwing another $1 to the shareholders. I mean, and this deal is getting pretty frothy at that point. David Zaslav did an amazing job getting everybody excited about this thing. He's the CEO of Warner Bros. Discovery. And then there's a lot of talk that Netflix is going to come back, would counter that, and this thing could go as high as 35. And that's a lot of people are talking about. And Zaslav essentially has told people, listen, if David Ellison comes back with 35, it's probably his, and he can have it. And, they probably have the money. Now, there's complicating factors here. The Saudis are involved in this, which kind of rubs a lot of people the wrong way. A Saudi sovereign wealth fund having they're basically going to have an ownership stake, a fairly significant ownership stake in the new company if it happens, because they're providing equity in this deal. It's not all Larry Ellison. Larry Ellison went out and said, I'm not using all my money. Let's get some other money. They ring-fenced their control, though. I mean, the Saudis will not have any management control. They won't have a board seat. They are kind of out of it in an operational sense.
I was going to ask you about governance.
They're out of it, and they agreed to it. So it's pretty interesting. They gave enough money. I think they gave their 22% of the overall value of this thing, with stock and debt. It's kind of like $100 billion. They're 22% of that. So they come under this, what's known as the cap for CFIUS, the Committee for
strategically important financial
investments in foreign companies, U.S., something like that. It's about foreign companies investing in the U.S. They have to prove it. So they don't probably have to get a CFIUS review on this. So they do have the cash. Netflix is kind of cash constrained. I mean, even though they have a huge balance sheet, $400 billion, they don't have a lot of, they don't have, tens of billions on their balance sheet. They can borrow, but do they really want to go in debt? Their stock has been getting crushed lately over this. Paramount, Warner Bros. Discovery stock is going up to $30 a share. That tells you that my bidding war thesis is right. It's at $29.53. Paramount Skydance. Where are they? They are at, they're up marginally today. They've been up and down lately the last 5 days. They're up now. The last 5 days, they're up marginally. So people kind of like their bid better. Netflix,
And
this is where it gets really interesting, where, it's got to be freaking out management a little bit. They're down another 4% today. Over the last 5 days, they've been down 10%. That's since this whole thing began. Even more since they won. It's pretty amazing what's going on here.
and just to reiterate, the president is out there saying CNN's going to be part of the deal. And
Yeah,
that's
by the
a
way,
major
I want to see exactly what he said on that, Bob, because if that's the case, then it's game over. Right? He's not. He's directly involved in this thing. He's not going to approve. If he's saying I'm not going to approve a deal unless CNN is part, I want certainty in where it's sold. Done, because there's only, remember, Netflix is buying the streaming service. They're buying the studio, Warner Studios. They're relying, as part of their bid to get it to 30.75, they're relying on its sale spin-off
to finance some of the purchase. Yeah, no, I see.
So you, as an investor, get a stub. You get something, a stub of stock that's worth something, which a lot of people think is not going to be worth that much money. So it's kind of suspect to begin with. But that's where there are the Ellisons are coming in with clean cash. Okay, and if they bid 32, 33, I don't know how you say no to this. So there is a bidding war. It's going higher. Obviously, the markets are signaling it. If Trump is saying that you got to have CNN as part of the deal, there's only one player that wanted to buy CNN, and that's who. That's
right.
The Ellisons and Peace Guy, because they want to merge it with CBS and kind of create synergies. It's what bankers do, right? That's called corporate restructuring.
No doubt about it. So,
but if you're going to play this, Bob, just, I don't tell people what to do. This thing could go higher. The stock is trading at 29 right now. Ellison has to at least bid 31 because he has to pick up. You would think he had to pick up at least the breakup fee, right? Which is $1 a share.
Right.
The 2.8 and 2.8 billion. So, and you think he'd want to throw another buck at shareholders. So, we're talking this number could change, and then does Netflix come back? I heard one word. There's an old scene in The Godfather. I don't know if you remember this. After Hyman Roth almost cornered Michael, remember? And Tom Hagen goes, "Boy, Roth, he played this beautifully." Now Hyman Roth, eventually got killed, right? So we don't want to go take the analogy that far. But David Zaslav, as someone involved in the deal, told me, he goes, David Zaslav, boy, he played this one beautifully. Remember, right? This thing started at $19 a share, then it was $23.50. It was cash stock from Peace Guy, and then it's all cash. This thing was, let's face it, it was, by the time it got to $23.50, it was all cash, but it started out as cash stock. I'm told. You know what I'm saying? This is very interesting how this, and he got it up there, and he wanted a $30 bogey, and people were like, "What, are you kidding me?" And he got it. It's pretty amazing. I think when this is all over, he's going to be CEO. Because he's going to get this bid up. I think he knows not to get too cute here. If he gets this thing up at a certain level, which is cash, he's got to have to.
Yeah, it's a done deal.
He's got to go for it, and he's going to be CEO of the year. He returned. Remember, this company started out with a $30 billion market cap. If this deal goes to 32, it's got to be in the $80 billion. It's more than double. If it goes to 35, as some people think, where I just did the numbers.
19 to 35 is almost double. So yes, he's about $60 billion. So that's correct. But even so, pretty amazing return for the shareholder. No question.
If this thing goes, it's 2.6 billion shares times, let's say it goes to 35, which people say it does. It's a $91 billion valuation on something that was worth like 30 when it started. So there you go. That's amazing to me.
Pretty amazing.
and so this is something. The ARBs are all over this. I first wrote the story yesterday. The Journal followed it today about how this is a huge merger ARB play, and people are betting on all sorts of stuff. Do you short Netflix? A lot of people are shorting Netflix. We should take a look at the short data on Netflix next time we air.
We will.
And maybe there's going to be covering by then, but because we're going to take a little bit of a hiatus, right? A little bit of a. How long are we taking off for Christmas? I can't remember.
Well, we're going to do one more show next week.
Okay, so by next week, great. So next week we'll have those numbers, and it'll be interesting to see what this thing is like day by day. You know what I'm saying? It's no shit. This is something that I can't put down I can't even work out. I'm getting calls like I got to wake up at 4:30 to work out. I put off working out today, and now I'm kind of like running around doing this and rewriting all my copy. So
Well, you're getting good scoop when you get a little snarky comment from your competitors. I've been following your
it's horrible.
And Charlie this and Charlie that, but you're in the middle of it, so you're getting a little.
Bob, I've been doing this for 35 years now.
A little needle.
I hate to break it to these kids. They've been snarking at me forever, and I've been giving them the big, flashing them the bird forever. I just keep moving.
Usually, you tell them to go in their basement. Then you give them the bird.
That too. Listen, I mean, this is what I live to do. You know what I'm saying? Like everybody, people my age are usually like, they're not reporting anymore. They're, doing whatever they do. You know what I'm saying?
Well, let's talk about Google for a second.
Okay.
Let's transition to a couple of things that we've been following this week. And, these stories and this data, we're going to do a synopsis next week. We've been noticing a lot of the data we put on this show. Last week, we talked about shipping stocks, and we talked about Apple, and we've talked about a lot of different stocks, C3AI, a lot of the battleground stocks. The word battleground stock, if you look it up in any AI-supported engine, whether it's ChatGPT, Copilot, whatever you're using, Perplexity, etc. If you look at battleground stock, you'll see it's associated with S3.
It's funny, Bob. A viewer.
When we invented that right here on this show.
So now this is funny. One of our viewers, actually one of our happy followers, who follows us, said, I never knew what a battleground stock was before. You heard it from Bob.
Right. And one of we think the value of this show is that these data points become news stories. So we're giving you headline news right here on this show. And trust me, we will go back and we'll show you that we put a little piece, maybe it's half a minute, and Charlie and I talk about what our data says. And then you'll see a story. Pick a mainstream publication. Pick one. It gets picked up many times, where all of a sudden there's a story about short interest, or there's a story about battleground stocks, or there's a story about active long investors versus short interest and the battle that happens between the two. So pay attention. This does and will affect whatever investment decision and portfolio positioning you do. There's a very, very, very strong link between what we cover on this show and what eventually happens in the news. So with that, we will talk about Google. One of the things we talked about 3 weeks ago, the amazing part about the couple of shows that we led with NVIDIA, obviously was big news about 3 weeks ago. That show got 350 to almost 400,000 impressions, but the click-through rate, which is something we watch very carefully, over 140,000 people listen to the show. And whether you're listening for 10 minutes, whether you're fast forwarding to Charlie's segment or my segment, doesn't matter. That's a lot of people. In the world of finance, that's a lot of people. And last week, very similar click-through rates, about 40%. So these things matter. There is an audience. People are listening, and we do influence. So one of the things that we've been watching very carefully is this change in leadership from NVIDIA to Google. And what's really caught our attention is the rise in short interest and the rise in Google happening simultaneously. If we could pull up that chart That would be
Rising short interest in NVIDIA.
No, in Google.
Oh, in Google. Okay.
Yeah, Google as NVIDIA sold off, rebounded. Google's just really exploded, but so is the short interest, right? So if you look at if you can pull up the short interest, median short interest float and total notional short. You have that graph? Well, we can talk to it. So what we've seen is that in the last 3 weeks, Google's taken over NVIDIA's role as the market's leadership barometer. It's very clear. And with shorts building directly into the rally, its next move, we think, will dictate the next rotation across the Mag 7. That leadership, right? That leadership you have to watch it very carefully. And so what you can see here is the total notional is the blue line, and then the median short float for Google is the blue line. You see that rise up, and that is telling you that people are really looking at Google because it's basically the most important contributor to index returns, and it's probably people are looking for to hedge and or some kind of reversal. Right. They're shorting into strength, and then they will want to cover. So watch Google. Google's now the leader. That's the point. The second thing we want to talk about is, I think, something that caught our eye, which is there's a Hong Kong stock. We love talking about China because I don't know if you saw this, Charlie, but the global payment balance in trade, China now has, I think, $1 trillion surplus for the year. $1 trillion.
Whoa.
Right. And they have been accused of, and it's probably true, dumping a lot of cheap products on the marketplace. Because why? Well, we have a theory at S3. If you look at China Vanke, which is a property developer, about an $8.5 billion property stock, you can see the price is in white, the short interest is in blue. Short interest is going through the moon. And so there's a reason, we think at S3, why China continues to dump these cheap goods on the marketplace. It needs the cash. The developers are building like crazy, and no one is occupying these buildings. And we were trying to find data about how many buildings have been built and what's the occupancy rate. Is almost impossible. We can't find it, but we'll still look. If you overlay the short interest in the development and property sector versus trade balances, it gives you an answer of what China is thinking. The property sector is really bad, but they keep building because it's the only way to keep people employed and keep them.
By the way, that's a pyramid scheme if I ever saw, right? Pyramid.
No, I know, I understand, and
kind of eat your own cooking until it's too late.
And this is what earnings came out for this stock. We were watching it, and because we were watching a lot of our statistics like squeeze score, borrow cost, et cetera. And this thing was flying off the charts. And we were like, well, why? They missed. They keep building buildings in Shenzhen, et cetera, in Guangzhou. A lot of reports that there was a lot of empty buildings, but they keep building because that's what the government tells them to do. So
by the way, we got a little
vicious cycle for them.
We got a comment which says it all. S3 data is gold.
Well, thank you very much. We really appreciate it.
Make sure that's not one of your employees there, Bob.
They get a raise. So
I got my wife to say that. Just nobody kidding. Joke.
No, we try really, really, really hard to see the things that the market is forecasting. The positioning tells you what the news is. Absolutely. And this is what we're trying to do. And then the other thing that we have on our radar screen is Moncler, which is the high-end Italian, parka and ski wear and clothing company that you'll see around town. And one of the things that has gotten a lot of attention is the K economy, right? The market goes up, but job openings go down, and that's a gap. And a lot of the rise in the stock market is not only AI related, it's very high end consumer related stocks. Moncler is definitely, like Louis Vuitton, et cetera, is in that category. And you look at, short interest as a percentage of float has tripled.
Oh my God.
And we rank how crowded that stock is on the short side. It's gone from a 25 score to a 60, so it's reasonably crowded. The shorts are rising lockstep with the stock price since March. It's a classic reversal pattern. And one of the things, why should you care? These stocks are typically supported by affluent consumers. It's attracting rising short interest, and perhaps we talked about dog food. We talked about a lot of other things that are high end. When you're seeing petering demand in things that are luxury goods, that is a sign that maybe inflation is a little higher than we think it is.
I think it is.
And it's pinching demand even for things that are luxury goods. And people,
I mean, there's so many countervailing things going on here. Gas prices are definitely down, although in certain states they're up. Certain states which still have embraced ESG, like New Jersey, people pay some of the highest electricity bills in the country. California, so this is this is hard to sort of create a macro sort of theory here about or macro sort of approach or explanation, I guess is the right word I'm searching for. When there's so many different things that are hitting us at once. Again, our job is not to give certainty, but to explain some of this stuff. I think the jury's out on this, just how much, Trump is predicting that growth picks up in the new year, wages pick up, inflation, the sort of the price impact of inflation sort of gets less onerous. That could help the Republicans in the midterm, or things stay the same, and that's not good for Republicans, and kind of not good for his presidency. So I guess we'll kind of leave it at that. We will be back next Wednesday. Right? Do you have anything more, Bob, to share?
Well, we love the comment. Thank you very much. And
by the way, someone said, I wish I were an employee of S3.
Send us your resume.
By the way, you get a free fleece if you get hired.
Oh, totally.
No.
By the way, they're very nice.
I got a free fleece, and I wasn't hired.
Right. It's a luxury good, so maybe if we're buying less, maybe that's a data point too.
By the way, are you fleeces made in China?
I don't know, but they're Cajus. So they're very nice.
The answer to that question, if you really want to know the answer to that question, tune in next week for another riveting edition of Risk and Return. I'm Charlie Gasparino from Fox News, Fox Business, the New York Post, with my partner in crime, Bob Sloan, signing off. We'll see you next week.